Hey Financial Devs, my name is Ryan Perez, aka Perez the Dev. Hope you guys are having a great day. Today, we're going to be taking a look at the big four numbers you need for investing in the stock market. So, as an overview, we're going to be taking a look at the big four numbers you need for investing in the stock market. I'm going to be letting you guys know where you can go ahead and actually find these four different numbers within the financial statements. And lastly, we're just going to take a look at why it's actually important and significant to even know these numbers and use them when you go ahead and decide to invest. First number we're going to be taking a look at is your net income. So the definition of a net income by the book is profit after all costs of making that profit have been deducted. So if you go ahead and have to make this service or product and it costs you $5 to make and you sell it for, let's say, $15, you've made a net income of $10 in total. So for your net income, you can find this on the income statement. The next big number we want to go ahead and take a look at is going to be actually book value, or also known as equity, plus your dividends. So the reason we want to know this is so that we know the value of the actual business if it were closed down and you sold off all its assets, or pretty much everything it owns altogether. That way we can get a nice understanding of where the overall company is actually valued at. And so for the book value or the equity, you can find this on the balance sheet, whereas dividends, you can find this on the cash flow statement. Third number is going to be sales. Now, book definition for sales is going to be amount earned from your sales or from your revenue. So this is pretty much when you go ahead and sell an item. If you made $10, you've made $10 in sales. That's it. It's just the straight up upfront money. With the sales, you would find this on the income statement. But in order to actually find these financial statements, just as a quick little rundown, you can find these in the 10K, what's also known as the annual report of the company. So whatever company you're looking to go ahead and actually invest in, they go ahead and distribute this report annually. That's why it's called the annual report, sharing financial information on that specific company. Last number you want to go ahead and take a look at is going to be your operating cash. So this is going to be your cash received from business operations. And so you can go ahead and actually find this on the cash flow statement as well. So again, if you're not sure where to go ahead and find these financial statements, I'll make sure to go ahead and leave it up there or in the description below, pretty much sharing where you can go ahead and find them, and then as well as breaking down each of the four actual financial statements. Although in this scenario we only use three, there are four different financial statements you are going to want to go ahead and be aware of when you go ahead and invest. We went ahead and take a look at the big four numbers you need for investing. We went ahead and shared with you guys where you can go ahead and find these different financial statements. And lastly, we're going to go ahead and take a look at, well, why do we even need to know these big four numbers when investing in the stock market? Well, you want to go ahead and take these four numbers and actually see that they're growing by 10% every single year consistently. So the reason that we want to go ahead and know these numbers is so we can find consistencies within companies that we actually think we like and can want to go ahead and invest in. Because if we like a company, that doesn't necessarily mean that's a company we should invest in. We should make sure that the numbers back up our feelings and see it more from a logical perspective of, wow, this company actually is very consistent because we've seen it grow from every single year by about 10% within those four numbers. We want to go ahead and take a look at those four different numbers and looking at it from that company or from the different companies you want to go ahead and invest in. It doesn't have to just be one, and make sure that it's being fairly consistent at about 10% growing every single year. Now, this is an ideal number. For example, with Warren Buffett, he owns Berkshire Hathaway. He owns See's Candies. So his company, Berkshire Hathaway, is pretty much fully owns See's Candies. So See's Candies is a candy shop. You can find it anywhere pretty much in the United States. And they are actually under 10%. But why does Warren Buffett invest in this company? Well, it's because he's very competent in more of that arena of candy and candy shops. It's things he actually really enjoys. And again, he has competence in, and he likes its consistency. So with See's Candies, it actually only grows at about 7% rate within those big four numbers every single year. But why does he still invest and pretty much own that company? Well, it's because he likes that over time it is consistent. And it's important to also see that it's not going to be every single year. You're not going to go and see a company grow 7 or 10% every single year until the end of time. That's not how it works. But on average, so over the last 5 years, maybe 10 years, 20 years out from now to 20 years back, you can pretty much see that on average it's been very consistent where it grows at about 10% every year. So in 2020, because a lot of companies were closing down, everybody had to stay home, yeah, you're probably going to see a dip in the actual return for a lot of businesses. But on average, you're usually going to see these companies that you like when you're going ahead and studying these big four numbers, you want to see grow at about 10%, or in Warren Buffett's case, 7% per year. But really just taking a look at making sure that this company is actually consistent. So not only do you like the company, but now you have some numbers to go ahead and back you and say this company isn't only a good company that you believe and trust in, and has all your emotional values that you like within the company. You now have numbers that show you and prove that this company is consistent and will continue to grow over time. To quickly recap, the big four numbers you need for investing in the stock market are going to be your net income, your book value plus dividends, your sales, as well as your operating cash. And the reason we want to go ahead and take a look at these big four numbers and see that they are growing 10% over time, because we want to have the proof and the actual hard cold numbers, because numbers never lie, showing us that it is a very consistent company over time. I hope you guys enjoyed today's video and gained value out of today's video. Thanks for watching.